First of all, let's talk about the markets. Today it was down half a basis point, but like I said, it really feels like a bump on the way up.
Obviously, if you look at the ticker for today very well, you notice that most of the rescued banks that had actually rallied prior to the end of 2010 actually amongst the major losers on the bus today, and that this was done also on strong volumes in the market, which actually indicates, like you rightly mentioned, profit taking on the part of investors. However, we remain positive, especially regarding the banking sector. Smart money at present will actually gravitate naturally towards that sector, especially the 9 rescued banks, most of whom are trading at about 0.9, 0.8 times.
So are you saying it's time to buy the rescue bank? Because some analysts are still on the sidelines for those ones.
It's time to buy a handful, those that are out in the clear, those that we're sure have investors who have actually committed to buying over the banks, obviously with certain caveats, i.e., for example, divesting from some of their subsidiaries and things like that. So once we know these things and the effect of AMCON on their books also, which has actually erased most of their non-performing loans that threw them into negative shareholders' funds anyways. So this is the time to buy some of these banks, because if you look at the industry, the broad sector in the banking sector, you find out that most of the top-tier banks are actually trading at premium to the industry average and median PEs and forward price-to-book numbers. So naturally, it will be beyond the middle-tier banks. We now have the 9 rescued banks, some of whom have actually gone a long way to clean up their books and actually present themselves to potential investors. And more so, we are looking at the March 31st deadline for central bank for some of them and June for some of them. So naturally, we're looking at about 40–50% upside in some of these stocks.